Good morning, everybody, and welcome to the last live session of the week. So let me just bring up the risk warning while I'm talking away. So as usual, if you want any different markets looked at, just mention them in the chat on YouTube. There's quite a lot to go through today. So it's been a pretty volatile couple of days. I mean, clearly today is the day that the UK was meant to be leaving the EU, but it's not happening, which is great. So we have at least 3 more weeks of chat about Brexit, which is really exciting, isn't it? Because we haven't had enough of that over the last 2.5 years. So we'll see. We'll see what happens with the pound today. It has been a bit weak over the last couple of days. The US dollar has been moving as well, which has clobbered gold. So we'll take a look at that and see what's going on there, and just see where these markets are finishing up for the week. We did have, excuse me, some problems with the sound earlier this week. So if there are any problems at your end, let me know, and I'll try and switch over to a different mic. But hopefully, it's working okay today. Just a quick reminder: if you open an account with Capital.com, we've got this promotion at the moment where we're doing 30 minutes Skype training on trading strategies, risk management, all that sort of stuff with me. So if you go to Capital.com/David, the details of that, open a real money trading account. We'll get in touch to arrange a convenient time to do all of that. And we do have our seminar, our trading seminar in Heathrow tomorrow. It starts at 10:30. Tomorrow morning. I think we've got about 35 people registered, so that's good. But if you want to do a last-minute registration, it's all free of charge. I have put the links in the chat on the right-hand side of the video here, and I'll put them in the description for the recorded one. So that starts at 10:30 tomorrow, and it runs, we'll finish about 4:30, and we'll talk a lot about trading strategies, risk management, real-world applications, all of that sort of stuff. Okay, and that's it. So the data we've had out today, we had I think that the German unemployment data was the one that I was keeping an eye on, because we have seen plenty of volatility on German data in recent weeks. So, but we had, I think we had a dip. We had a dip in the number of people unemployed. So I think we had been seeing a bit of a lift for the DAX earlier on today. But let's get into these markets and see where we are. Let me just drag this across. Let's start with the pound, as it is meant to be Brexit Day, and we have seen some volatility this week for the pounds. Let's just bring that up. So let's take a look at that chart. So pound, US dollar. Then we'll take a look at the euro, because the euro has been sliding this week. We'll take a look at that. And then we'll take a look at some of these other markets. So for now, let's just take these indicators off. Let's just see where we are for pound US dollar. So this year we have seen this recovery, and I'm talking about it a lot coming into this year. My expectation was that we would see the pound strengthen into Brexit, because I felt like all the bad news was out of the way. I think we've had the crash for the pound back in June 2016. And I just thought that maybe we'd see a gradual recovery. We did get that up until the middle of March, but I think because we have now so much indecision, and I mean, who knows what's going to happen next? I think we've seen that the pound drift off. But I think it is interesting down here. It's interesting that we are ending the week down here, because clearly it's on this, coming up to this big level of support. So we're back to the lows from the middle of March, around about 129.60. 130 will flip over to a shorter term chart in a minute. 130 has been good support. Here we go. Let's flip over to the hourlies. You can sit and you can see. So you can see just how much over the last 2.5 weeks this area has been supportive for the pound. So if it's going to bounce from anywhere, we're here, you know. So looking at this, there is arguably, if you were so inclined on a Friday to do a trade now, there's arguably a trade there. You know, we've seen, look how well these lows have held up going back to Feb. So going back to Feb the 22nd, the lows around about 129.80 and then 129.60-ish in mid-March. So this whole 129.50 to 130 area has been big support for pound US dollar. If it's going to bounce from anywhere, then we're here. So I think it's interesting down here. I mean, there's a couple of arguments for not taking it. You could argue that trend is still down. It is still weak. Maybe we want to see a bit more consolidation above these lows before we get a move on. Also, it's a Friday. It's the end of the week. Maybe we won't see much happen today. And you have the risk of holding it over the weekend, which normally I wouldn't be bothered about. But I think because so much of this is politically driven at the moment, who knows what happens over Saturday and Sunday when it comes to UK politics. And maybe if it's still down at these levels when we look at things on Monday morning, maybe it's a better opportunity. But, in a nutshell, if it's going to bounce from anywhere, then we're pretty much here. 29.50 to 130. I mean, clearly, the flip side of that, because we need to have two strategies. I think if we start breaking below 129.50, you'd expect there to be lots of stops below that level. So maybe it kicks off a more extended drop in the pound. But for now, looking to see if the buyers come back in. Let's see what the old squiggles are telling us. So we've got the RSI down here. The RSI, not surprisingly, has gone oversold over the last couple of hours. We've got a bit of bullish divergence where the market slipped to a low, slipped lower again. We've got higher lows on the RSI. So again, this is suggesting that maybe the weakness has been overdone, and a similar sort of thing on the MACD down here on the hourly, where it crossed over, giving a buy signal back here. The pound has slipped a little bit lower this morning, but we've got higher lows on the MACD. So at the moment, it is all pointing to a rally. It's just whether or not you feel happy getting in down here and potentially holding over the weekend. But it has been clobbered this week and back to this big support. Let's see what happens. Let's see where we are on Monday. Let's take a look at the euro, because the euro has, in the euro's very undramatic way, it just continued to be slipping lower all of this week. So if we flip out to a daily chart, we'll look at euro US dollar, and we're going to have a look at the dollar index today, because we saw a lot of US dollar strength across the board yesterday. So we'll have a look at that. So the euro has been in decline for all of this week, or pretty much all this week, since Tuesday. So we've had every day we've seen the euro sell off. It's pulling the RSI on the daily chart down towards the oversold level. It's going to be interesting going into next week. We've got big euro support coming in around about 111.75. The March lows, I think they were probably the lowest since June of whenever it was, June 2017. So it's going to be interesting if it nudges much lower than where we are now, because about 40 points below where we are now are the lows for the year in euro US dollar. And when we were down here last time, we did see the market turn around and rally a couple of 100 points. I think it's been a frustrating market from a momentum point of view over the last few months, because it breaks lower, like here in November, but then recovers, breaks lower again here in March, and then recovers. So I think it's going to be really interesting next week for euro US dollar to see what happens at these levels. But to flip it over to an hourly, here we go. We had that that move on the US interest rate decision. Was it last week, wasn't it? Last Wednesday. Then we had the break last Friday. So this time last week, the break on the German PMI data. It did try to recover earlier this week, but since then, we've just been declining. So for me, that trend is still down on the euro against the dollar. But I think it's going to be interesting next week, because we're pulling back to this big level. So I think it needs to break above 112.40. So that the highs from yesterday afternoon and the highs for so far this morning, between 7 and 8 this morning. So I think that's the level to watch for the euro. But at the moment, still under some pressure, but big support down here. So I think next week's going to be an interesting week for euro US dollar. Let's take a look at the dollar. So we can look at the dollar index. So we've got this dollar index, which is a widely traded instrument. We added it to our platform a few weeks ago. You can look on Wikipedia, because I can never remember what it is, but it's the dollar against a basket of other world currencies. So the euro, the pound, the yen, the Swiss franc, etc., etc. So I think it's going to be interesting. But I was looking at this. I think we looked at it last Friday, because I said I thought it was interesting what happened to this dollar index after the US interest rate decision came out a week last Wednesday, because they didn't raise rates, which was expected, But they also said I think they don't expect to raise rates again in 2019. Okay, and that wasn't expected. So we saw this was the decision. We saw the dollar get hit, which you'd expect. No interest rate rises, bad for the US dollar. But by the next day or the next couple of days, it had recovered all of those losses. And I remember saying, I think, well, if you wanted to be a buyer of the dollar from a medium-term position, we've got a really obvious place to put the stop, and it's underneath the lows after that interest rate decision. And since then, it just has carried on up. We've seen, in dollar terms, a relatively chunky move. And I think this is an interesting one now. If you go back to the daily chart, okay, the story for the last 8 months of last year, from about April last year, was one of US dollar recovery. In 2017, the dollar had its worst performance since 2003. Yeah, so this was the market just sliding, the US dollar just sliding all the way through 2017. 2018, we saw a comeback from April, but it stalled in December of last year, but it's arguably still bullish. And I think where it's going to be interesting, we'll keep coming back to this over the next couple of weeks to see what happens. Are we going to see the dollar index break out to new multi-year highs? And I think if we see it, let's call it 98. It's currently 97.36. These old highs are about 97.75. If we see it break through these old highs, it could mean the start of a move much higher again for the US dollar for the rest of this year. So I think it's going to be a really interesting market from a medium-term point of view, to see what happens up here. Of course, if you're of the opinion that actually the dollar strength this year has been overdone, you have got the perfect level to sell the dollar now, because you've got the obvious place for the stop loss. For me, if I was selling it now, is at 98, because 98 has been such a barrier for this market. I arguably wouldn't want to sell it just yet because it's a market that's still strong. You can still see it's pushing out to fresh highs for this recovery that's been going on. But I think it's going to be a real interesting potential barrier up here at 98. So some really big moves over the last couple of days in the dollar. So let's see. So someone's asking, Tony is asking, I assume we're looking for trending markets, not sideways markets. I think it depends on your approach. Personally, I look for markets that are trending. Are there any good trending charts since Forex seems very sideways? Well, you could say, this dollar chart that we're on now, that's in a good trend. If we looked at a really short-term trend, it's not over the last week or so. Again, it depends on your time frame. We've got a good trend going on there. So but again, for me, how much is left in it? Maybe if it breaks 98, we see a new trend forming. Euro dollar, again, that has been in a trend all this week, slipping lower. But maybe we're setting up for a trend reversal. So I think they are out there, but I do agree with you that plenty of markets are a lot scrappier in recent weeks than maybe they were towards the end of last year, beginning of this year. But I think it depends on what sort of time frame you're looking to trade. But for me, I think the dollar index is going to be a really interesting one to watch, and we'll keep coming back to this over the next couple of weeks to see what happens at 98. So this dollar strength. So what market is one that really suffers from dollar strength? Typically, it is the price of gold. Price of gold got absolutely clobbered yesterday or over the last couple of days. So the price of gold earlier this week, 25th of March, touched 13.25. Yesterday, it traded as low as 12.87. So that's a big collapse in the price of gold. Let's just remind ourselves where we are. I go back, I think I've said for a while, I've got some long-term positions in gold. I've basically just been buying in sort of every month since October. So buying, and try having wide-ish stops and trailing stops up. So I've bought bits on the way up here, but I also ended up buying up here about 13.25. So, a sell-off like this, I'd rather it obviously went up $20. But I think a sell-off like this is interesting because if we look at this for gold in the scheme of the big trend, this is just a correction. All right. So we've got this trend since August last year that's been chugging higher. And we've got support coming in at 12.50 on that trend line. For me, the big level to watch. Let's get rid of the oscillators for now. The big level to watch as we were looking at it beginning of March, it's those lows for the year so far on gold, 12.75-ish. Okay, it traded as low as 12.80 in March, hooked higher, $40 rally. We're back here again. What's going to happen? So for me, I am looking for the bounce from down here. If it starts trading below 12.75, I do think the risk is that maybe this trend is going to be in trouble. This recovery is going to be in trouble. So let's see what happens. So for me, I think next week's going to be an interesting one for gold. You know, we've pulled back into this zone. Let's flip it over to the hourlies. There we go. We had this recovery going on from the lows in March. Gold has got clobbered the last couple of days, and we're down now here, down below 1300 again. But we're back into the zone. You know, you can see what happened here last time. We had a few days of just knocking around 1275, 1285. And then the recovery started. So I would be expecting the same thing to happen again. Let's see what next week brings. Let's put on the daily, just have a quick look at the indicators. Then we'll take a look at oil. Here we go. So when we were down here last time, RSI, the 10-day RSI was oversold. Down here again, oversold again. And then MACDs gave a buy signal middle of March. And sort of not doing anything at all at the moment. So let's see what happens. So I think it's a reasonable candidate for a bounce down here, the price of gold. Let's see what happens next week. And while we're on gold, let's take a look at the oil price. So again, with the price of oil, we haven't seen, yet again, it's this $60 a barrel level. So it cannot break $60 a barrel. And we're seeing exactly the same thing this week. But there have been trading opportunities. So we are still in this recovery for oil off these lows from December. But you can see just how tight, let's just zoom in, how tight the trading has been the last couple of weeks. We'll look at a short-term chart in a minute, from 58 through to 60, and just bang, 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 incredibly tight range. Let's flip it over to the hourlies. Let's get rid of the squiggles for now. Yet again, we keep talking about this level. It feels like every week we're talking about $58 for the price of oil. So on the way up, it sells off to 58 March the 15th, rallies, sells back to 58.50, rallies March the 25th. That was earlier this week, wasn't it? I think drops back, comes back again later March the 25th. That's it, because I traded it there. I remember now, we're talking about it Wednesday, and the market rallies. And the same move again yesterday, between 1 and 2 yesterday. The price of oil drops down to 58.50, below 58.50, and bounces back more than $1. And actually, it goes back to what the question you said, Tony, that this is clearly a market over the last couple of weeks where we don't have a trend. You know, we've got a sideways trend, if anything. But if you want to sit there and watch it, there are still opportunities. And I think we need a break on oil to make it a bit more interesting. You know, it's clearly, whenever it's snapping back to those mid 58s a barrel, it's clearly, you know, it looks like a buying opportunity with stop losses below 58, this big support. And then it ramps its way up to 60, as it is doing at the moment, 59.80. And the sellers come back in. So we need a break one way or the other. And that's when it gets maybe a bit more interesting. You know, I still think $60 a barrel is a problem for oil, as it's proving to be. You know, if the price of oil is going to run out of steam anywhere, then we're pretty much here, you know, up at 60. But at the moment, it's not breaking down. I think if it did break down below 58, there could be a lot of people who throw in the towel in the short term, and the selling pressure builds. So 58 to 60 is the range we're in. I think it is tradable. Arguably, it's gearing up for a sell now. If it blips above 60, you could argue, okay, sell with stop losses the other side of $60.50. But no sort of trend in the bigger picture. But it's still an interesting market. Pretty overbought up here, as you'd expect, just bumping around. Bit of bearish divergence where the market's pushed higher, but the RSI hasn't followed. But we need a break, $58 or 60, to see what's going on. Right, that's all that done. Stock markets. It's been an interesting week for stock markets. Let's have a look. Start with the S&P. I think the S&P is a good market because it's the broader US stock market index. I do probably, I don't know, maybe 4 or 5 trades a week on the S&P, so it's one I'm always familiar with. This has been a really interesting market this week. Just remind ourselves of the big picture. So we were in this recovery still since Christmas Eve. We've seen a heck of a recovery for stock markets over the last 3 months. Pushed out last Thursday, I think, to fresh all-time high, not fresh all-time highs, I'm talking about fresh highs for the year for the S&P. And this week's been really choppy. Let me walk through. Was it what day was it? What day is it today? Friday. So I think it was Wednesday afternoon. What was going on Wednesday afternoon? Let me just take the squiggles off for now. It's been a really interesting week. Okay, let's start with Monday. Just to, I think, just reinforce maybe where some of the opportunities are and the importance, I think, of trading off big levels. And I did a video on this yesterday that's on our YouTube channel, and I'll put a linking in a minute. But so it was Monday. Monday was the 25th, wasn't it? So we had a really big sell-off on last Friday for the S&P. And then Monday, it pushed a bit lower in the overnight market. And when the market opened, what was interesting, it came down. Let me just magnify this. It came down to the overnight lows rallied. And if you thought you'd missed it, it came back down again at 6 o'clock on Monday to the overnight lows. Let's just pick up on those. I think it might be too low to pick up on this chart, but down in sort of this sort of area, these lows down here. And then rallied. Let's walk forwards into Tuesday. So I did end up buying off these lows, getting stopped out for a bit of a profit, buying again, and then it really moved into Tuesday. So into Tuesday, the market rallied. But what was interesting was on Wednesday's trades, so the S&P opened about here. I ended up buying, looking for a bounce off Tuesday support. It went sailing through, got stopped out. But where did the weakness stop on Wednesday afternoon? It stopped yet again off these lows from Monday. So it's just a simple thing that looking at big support levels for markets, as we saw in oil, at $58 a barrel, can set up really good trading opportunities in terms of risk versus reward. And just in case you missed it, you had an opportunity. If you were still up at midnight, you had an opportunity to do it March 28th at midnight. And then this is where we are now. So it's actually been a pretty sideways week for the S&P. We're trading at 28.19. What's going to be interesting is, I think there are a couple of interesting things here. We've got the highs from Tuesday at 28.31. So arguably a bit of strength this afternoon. You might want to be a seller ahead of those highs. If it gets pushed down again, let's see what happens if it gets down to that sort of 27.90 level. So I think it's been a pretty directionless week, but I think there have still been good trading opportunities, and you've not necessarily needed to sit there and watch it. You could have an order in. A lot of the stuff I do is just orders in around support. So that's the S&P, pretty sideways week. Let's see what happens. If it starts breaking below those lows for the week, that would be interesting going into next week, because the risk is for a deeper sell-off. But at the moment, watch 27.85, 27.90, and 28.30 as capped any progress. Let's take a look at the Dow. Then we'll have a look at the European markets and see what's going on there. So again, pretty much the same for the Dow this week. The lows for the week on the Dow, around about 25,370, 25,400. It did sell off on Wednesday afternoon to 25,420. So it came within about 60, 70 points of those lows. We have seen it push higher, but for the Dow this afternoon, those highs from Tuesday might be important, just above 25,800. So again, a pretty sideways week for the Dow, but some definite levels to keep an eye on there. Let's see what happens, but a pretty inconclusive week. DAX, German index. Then we'll have a look at the FTSE, because the FTSE's been interesting. I can see someone's mentioned that as a trending market. So there's our DAX. This is the daily DAX, and we have seen a recovery for most of this week. So these daily candles here, this is the week so far. We have seen something of a recovery, trying to push higher. We had that low. I think we were talking about that low on Monday. Let's take a look at this in a bit more detail. Let's take a look at the hourlies. Here we go. So the market on Monday gapped lower to 11,290, and then all of Monday it was sort of hovering above that low. It was trading down to 11,315, 11,316. So it had been pretty good support. Tuesday, the market ran right into that low towards 11,300 and bounced. And since then, we have seen it, try to stage a bit of recovery. So in the really short term, some levels to watch this afternoon. The market's currently trading at 11,450. I think we've got support from yesterday afternoon around about 11,420, bigger support at 11,400, bigger support again at 11,370. So I'd be tempted, if I was trading the DAX, let's flip it over to a short-term chart, I'd be tempted to be a buyer if we got a push down to the low 11,400s, because it has been pretty good support for the last couple of days. Let's see what happens as the day goes on. So arguably the DAX has been a bit more interesting than the American markets this week, and some obvious levels of support, but it has been a relatively low volatility week, I think, for stock markets. So there you go. Let's take a look at the FTSE, and then we are done on stock markets. So the FTSE, let's get rid of the squiggles for now. So the FTSE's been interesting because I've mentioned this a few times. We looked at it earlier in the week. We'd had this move in the FTSE off the lows, and I remember when we were looking at this last week, saying, well, if the FTSE is going to rally from anywhere, then we're pretty much here. If we're looking at that trend, we're there, and we have seen the FTSE be a lot more interesting this week than US markets. We're seeing the market push higher, holding in that trend. We've got big support on the FTSE running from 7,050 through to this week's low, about 7,150. And we've seen the market push higher. So at the moment, any weakness in the FTSE, here's a trending market for you, Tony. I noticed you picked up on that. Any weakness in the FTSE looks like a buying opportunity. Just flip it over to the hourlies, bring in the squiggles. There we go. So this has been the trend this week. Again, we've seen the lows for the week made on Monday at 71.60. Did come back to it Wednesday afternoon, like the S&P did Wednesday afternoon. Came back to the lows for the week, trading down to 71.67, and it's 100 points higher at the moment. So the FTSE's looking pretty strong going into the end of the week. And of course, that is being helped by the weakness we've seen in the pound over the last few days. When the pound goes down, traditionally against the dollar, the FTSE goes up, because so many of these UK blue chip companies derive their earnings in, for example, dollars. So a weak pound always flatters their earnings. So it's an interesting finish to the week for the FTSE, but again, be tempted to be a buyer. Maybe the more interesting market to watch is the DAX, this afternoon, because we have seen good support all this week, not a million miles below where we are now. So maybe this is an interesting market to watch for the rest of today. Let's see what happens. But I think that's it. So I'm going to get into the questions now. But what I would say, we did put this video up yesterday, which has proved to be very popular. I always bang on about the importance of big levels and blah, 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 all that sort of stuff. If you go to our YouTube channel, I'll show you now. So you're watching this on our YouTube channel. So once you've finished watching, if you click on the Capital.com logo just below the screen and then go to videos, the video we put up yesterday is this: how to trade using support and resistance levels. So when I talk about these big levels and stuff, I'm talking about it in a bit more detail in that video. So it's however long it is, 13-minute video, so you can access that from in there. But let's get into the questions now. Let's have a look and see what's going on. So let me see, what's the first question we've got. What are your thoughts with pound US dollar? We did that. We covered that, didn't we? But I thought, again, I think it's interesting. There's maybe another one. Maybe the pound and the DAX, the markets to watch today. Pound, because we're down at 130, big level from the past. We're seeing it pretty stable over the last hour or so. Let's see what happens, but maybe a bit more interesting on Monday. What's happening with the German 30? We had a look at that, didn't we? We had a look at that. I think that could well be the market for the day. The DAX for the rest of this week, see what happens. We looked at the Dow. So the Dow has been pretty sideways all week, but we've got definite barriers, definite support and resistance levels that we could look at trading off that. Sterling yen. Let's have a look at sterling yen. So we've looked at this a few times in recent weeks. So 150 is the big barrier for sterling yen. Let's take a look at that. So on the dailies, 150 has been an enormous problem for sterling yen going back to May last year, pretty much. So it hasn't got above it. But what's interesting is, I suppose, if you wanted again an aggressive trade on sterling yen and the pound against the yen, there's an argument, if you really want to be a buyer, now is the point to buy it. I think that's almost worth a go. I mean, clearly it's not financial advice, but I think it's interesting down here. We sold off in March to 143.70, then rallied 500 points. Sold off in again March the 21st, 144, and rallied a couple of hundred points, and we're back here again. So again, I mean, there's this thing, isn't it, across the board for sterling? It's been pushed back to a level where if it's going to bounce, it should be bouncing from here. Let's see what happens with sterling yen. But a big floor there. But if that floor gets broken, if that whatever the lows are, 143.50-ish gets broken, I suppose we do have support back here from Feb at 141. But that's an interesting one, I think. Sterling yen. We did the FTSE, we did the S&P. Palladium, I'm glad you mentioned Palladium because I saw yesterday, I remember looking at that a few weeks ago and being amazed at how well it's done. And I saw yesterday, I think it got a bit of a clobbering yesterday, didn't it? On the US dollar strength. Because we looked at this, because I never look at this, and I think we looked at it, is it November or maybe this year, and it just goes up all the time. Absolutely incredible run. But look at that. That's been the move over the last couple of days. So let's bring in the old doodahs, the squiggles. So if we were looking at the RSI, because it's got hit so hard, relatively speaking, not surprisingly, the RSI has gone oversold. When was the last time the RSI was oversold? We're going to go all the way back here to August last year. Okay, so and that worked pretty well. If you were selling a trading system, that would be a great example to use of the well-chosen example. Buying when the RSI went oversold for Palladium and just sitting on it. So we're pretty much oversold. I suppose it's interesting that is this the end of the trend, or is this just a particularly severe correction? For now, I would be tempted to think it's going to have another look at least at getting back up to 1600. So for me, I'd be tempted to, if I was trading this, I'd be tempted to think about buying it. And I think, where does your stop go? Because I would definitely want to stop, because this thing clearly, once it starts moving, it can start moving. And I think one of the things I saw on Twitter yesterday was someone said it was falling because it was a bubble. I think somebody had come out and said it was a bubble. Whatever. We have this big support at 1300. So if I was a buyer at 1370, the closest I would want my stop is under yesterday's low, which is 1322. But actually, probably the other side of 1300. Okay. How small can you trade this? Here we go. We've got me thinking now. Hang on a second. Let me just flip this, because I have this screen magnified. I think you can probably trade this quite small with us. So let's say we want to buy it. What's the smallest we can trade? 0.1. So 0.1 is, so if I had my stop loss at below, what did I say? Below 1300. Actually, below, what am I talking about? Let's say below these lows. Yeah. So let's say my stop's going to go at 1290 from 290. Okay, that's pretty small. So even if I'm a buyer now at 1372 with a stop at 1290, that's only £6 risk on the smallest you can trade with us. So I could take a position and not risk a vast amount of money. Let's put that in. Let's put in a little trade on Palladium. I haven't done a trade in these live streams for a while. Let me just make sure I'm happy with my stop here. Yeah, let's do it. Let's see what happens next week. It'll be exciting, won't it? So we risk, because this is actually my real money in this account. Let's push 30 quid. There we go, done. We'll come back to that on Monday and see where Palladium is. But I think it's interesting that it has bust so much in the last few days after just rising and rising and rising. Okay, these trades never go well though in these live streams. Let's see what else. Would you say there's a difference to trading the German bind market, I guess you mean the German Bund market, to Forex and the way the markets work? Recently been asked for company trading bond market, but when trade Forex. I think if you trade Forex and you're familiar with trading Forex, I don't think it's a massive jump to trading something like the Bund. We don't cover the Bund, so I can't show it on here, but I do think it's a really interesting market. It's a really technical market. It sees a lot of volume. You get trends and everything else. It's arguably a bit less noisy than FX, if that makes any sense. So I think if you're familiar with FX, I think FX is probably one of the hardest markets to trade. I mean, all markets are hard anyway, but FX is the one that everyone goes to, and it's arguably one of the harder ones, I think, because it can get a bit noisy and a bit messy. So I think the Bund is a very interesting market, and it shouldn't be a massive transition. Okay, that's it. No more questions. So no more questions, and we're done. So we'll come back to this on Monday, 10 o'clock on Monday. So I think interesting market. The DAX has bounced already by the looks of it. So I think the DAX is an interesting one to watch going into this afternoon. We're seeing a bit of support coming in now, but because of these lows, these old lows, 11,400, 11,420, maybe down to 11,380. So it's still positive. It's selling off. Is it going to be a buying opportunity? That's an interesting one to watch. The pound, because it's meant to be Brexit Day, and we've seen it under pressure all this week, and 130 has been a big level. So I think they're the interesting markets to watch. US stock markets have been a little bit boring, but it'll be interesting to see how it goes on this afternoon. Do things get a bit spicier going into the weekend? But we'll wrap it all up there for the week. So as usual, any questions, feel free to drop me an email. To never miss out on all this stuff, if you just make sure you're subscribed to the channel by clicking subscribe, click the alarm bell thing, you get a push notification whenever you go live. And to find out more about the company, go to the website. That's it, isn't it? Okay, okay, what's that? There's a last question coming in. I've been trying to hedge on UK 100. Is this a good strategy? When you say hedge, what do you mean? I think people use the word hedge in different ways. So I'm not quite sure what you mean by that. If you mean, are you trading it or hedging it? Maybe drop me an email, Frank, and that might be easier. Drop me an email to david.jones@capital.com. Just explain what you're doing, and I'll see if I can give any words of wisdom. Right, we'll do it all again on Monday. Have a good weekend, everybody. Thanks for coming along, and hopefully see you Monday at 10 o'clock.